Hey guys! Here are 8 top stocks Wall Street picks for 2025. Welcome to the new year, same as the old year. Artificial intelligence remains the star of the show, fueling spending and optimism across nearly all sectors of the market. Unemployment remains low, prices are falling, and consumers remain resilient. But as things tend to go, that all could change. Rising geopolitical tensions and China's struggling economy continue to pose a threat to stocks and the markets. President-elect Donald Trump's proposed tariffs on foreign goods could bring inflation back up and force the Federal Reserve to shift policy and halt interest rate cuts or even raise them. On the other hand, Trump's more business-friendly approach could lead to more mergers and acquisitions and a surge in IPOs, and his promise to roll back green regulations could spur more oil and gas drilling and coal mining. Against this backdrop, Wall Street analysts are rolling out their top stock picks for 2025, companies they believe can not only weather any expected or surprise headwinds, but will thrive in the new year. Wish you all good luck for the new year. Please subscribe to the channel if you like the content. It really helps to keep us moving forward. Thank you. Now let's talk about the top 8 stocks. Number 1 on the list, Alphabet. Analyst, View. Wedbush named Alphabet as its top internet pick for digital advertising in 2025. The analysts argue that the company's effective integration of generative AI into its core search product should unlock more complex queries and incremental monetization opportunities over time. Questions about the company's ability to maintain its dominance in search could take a back seat as investor focus shifts to cloud growth. They noted that new CFO Anat Ashkenazi's cost control efforts could lead to better margins. At the same time, the firm acknowledged the risk from pending legal battles, but views structural changes as an unlikely outcome. Wedbush has a $220 price target on the stock and a buy-equivalent outperform rating. Our view: the multiple antitrust cases against the Google parent have been a major overhang on the stock, and that doesn't necessarily go away with the new administration, given incoming Vice President J.D. Vance has been a harsh critic. Any change in enforcement agenda could help lift shares. Another concern: the rise of AI-powered chatbots like ChatGPT taking share from traditional search. But Alphabet should be able to handle these challenges and is making strides in its new quantum computing chip and its growing robotaxi company Waymo. What do you think about Alphabet? It is going to be a good year for Alphabet. Please share your thoughts in the comments down below. Number 2 on the list, Amazon. Analyst View Roth MKM tagged Amazon as its top mega-cap pick for 2025 after the annual Amazon Web Services (AWS) conference highlighted the company's growing dominance in cloud and AI. Analysts noted that AWS is on the cusp of accelerating growth in AI cloud driven by leadership in internet cloud infrastructure, in a research note to clients. Further benefits from Amazon's regionalization strategy and its fulfillment network are also expected to boost Amazon's retail operations and margins to support long-term growth. The firm has a buy rating on the stock and a price target of $250. Our view: AWS is well positioned to accelerate growth in 2025 as generative AI drives demand for cloud services, helping Amazon stay competitive against Microsoft and Alphabet. On the retail side, profitability is set to improve with gains in efficiency, ad revenue growth, and international performance. Even if a slower economy impacts IT and consumer spending, the adoption of generative AI should keep AWS demand high. Amazon is one of the core holdings in our portfolio, meaning the stock has excellent fundamentals moving into 2025. What do you think about Amazon? Leave comments down below. Share your thoughts. Number 3, Apple. Analyst View. Despite hitting all-time highs in 2024, Morgan Stanley still sees Apple as a top pick for 2025. The analysts remain bullish on Apple Intelligence, its AI-powered technology, which they say will accelerate the iPhone replacement cycle. They also expect double-digit growth in Apple's high-margin services business to drive expanding gross margins. While China's struggling economy poses a risk, Morgan Stanley said it is limited as key products like the iPhone, Mac, and iPhone could be excluded from President-elect Donald Trump's proposed tariffs, as they were in 2018. Morgan Stanley has an overweight rating on Apple stock with a price target of $273. Our view: while iPhone demand has softened recently, we expect a rebound as more Apple Intelligence features are rolled out and awareness grows. Apple's services business with steady revenue streams from subscriptions remains a critical growth driver. What do you think about Apple in 2025? Number 4, Broadcom. Bank of America has Broadcom as a top semiconductor pick for 2025, given its AI chip business serves major hyperscalers, delivers double-digit earnings per share, and has the best-in-class profitability for the sector. Analysts view robust AI investments and Broadcom's advanced chip development with new customers as key growth drivers, but warn growth could moderate in the second half of 2025 as tougher year-over-year comparisons emerge. They maintain a buy rating with a $250 price target on the stock. Our view: Broadcom's leap into the $1 trillion market cap club underscores its leadership in semiconductors. With hundreds of billions poised to flow into computing investment in 2025, Broadcom is primed for further growth. After delivering stellar returns off a strong fourth quarter, we locked in gains and downgraded the stock to a 2, keeping portfolio discipline, given its oversized position. Despite the move, we remain bullish on Broadcom's long-term AI potential. 2025 is AI booming. What do you think about Broadcom? Number 5. Meta Platforms. JMP Securities selected Meta a 2025 top pick based on several catalysts. The company is expected to launch a new version of its Ray-Ban Meta glasses with an integrated display in the second half of 2025, building on its success in the wearable tech market. Success from its investments in augmented reality could also lead a re-rating of the stock. It has so far been punished for the billions of dollars put into these new initiatives. The firm also raised its price target on Meta stock to $750 from $660, while maintaining its outperform rating. Our view. As one of the leaders in generative AI, Meta will be able to serve up better contextual content and advertising. New AI creation tools for companies and organizations allow them to make their own ads. As the company brings more tools to its ad marketplace for sellers and finds new ways to engage with users, the average revenue per user should increase. Management should continue to keep investing in AI as well as Reality Labs this year. While losses in Reality Labs are expected to continue for the foreseeable future, the street will be forgiving so long as the red ink is kept in check, and profitability and cash flow remain top priorities. Given the massive regulatory oversight on big tech last year, regulation could be a risk for Meta, since it's still too early to gauge Trump's stance on large players in the sector. CEO Mark Zuckerberg's decision to ditch fact-checkers on Facebook and Instagram showed the company trying to get on the good side of the incoming administration. What are your thoughts about Meta in 2025? Number 6. Nvidia. Bank of America named Nvidia a top pick for 2025, citing its dominance in the AI chip market, led by strong demand for its Blackwell chip. Analysts see Nvidia benefiting from rising AI-driven spending by hyperscalers and praised its chip's performance, energy efficiency, and scalability. Despite lofty expectations, analysts say the hype is warranted given Nvidia's expected 80% market share. The bank has a buy rating and a price target of $190 on the stock. Our view, we downgraded the stock to a buy from a strong buy and would wait for a pullback to buy again. We still see Nvidia as the AI leader with Blackwell demand exceeding supply. Other areas of focus this year could be emerging opportunities in its software business and sovereign AI partnerships globally. It is like the legend Jim Cramer said, "Own it, don't trade it." Nvidia stock. What do you think about this stock? Let us know in the comments. Number 7. Disney. Morgan Stanley chose Walt Disney as its top media pick for 2025. Driven by expectations of substantial streaming profits, as the shift from linear TV to platforms like Disney Plus accelerates. Analysts highlight Disney's unique position to dominate as a global content distributor across TV, mobile, and broadband, calling it a potential leader in the distribution king era. The next 2 years should also be box office winners due to its strong slate of releases. The bank has an overweight rating and a $125 price target on the stock. Our view, Disney's turnaround should continue to gain momentum in 2025 under CEO Bob Iger, who is bringing the luster back to the entertainment giant that struggled with streaming losses, high content costs, an underperforming box office, and slowing theme parks heading into 2024. But that's in the past, and Disney is a changed company. We expect the softer attendance at Disney's theme parks to improve over time as the economy normalizes, and as Disney eventually starts launching new attractions. Streaming profits should continue to get better, and the prospect of new leadership in 2026 could spark renewed excitement for Disney's long-term growth. What do you think about Disney? Is the stock as lovely as the theme park? Last one on the list, Microsoft. Piper Sandler said Microsoft is one of the strategic vendors best poised to capitalize on AI trends, calling the software giant a top pick for 2025. Analysts mentioned Microsoft's well-defined AI product cycles should benefit from the massive amounts of software-related spending elevated by the new AI era and digital labor functions. Piper points to several potential catalysts for Microsoft this year, including AI revenue eclipsing $10 billion and its cloud business Azure poised to accelerate in the back half. However, Microsoft is entering a period where its valuation metrics could become distorted as the company aggressively invests to maintain its first-mover advantage in AI. The firm has a price target of $520 on the stock and a buy-equivalent overweight rating on shares. Our view. While we're upbeat on Microsoft's cloud computing division Azure and the gaming business, the company's generative AI assistant Copilot is giving us pause. Microsoft is spending massively in building out AI infrastructure, including plans to invest about $80 billion in AI-enabled data centers in 2025 to maintain its leadership in the field. But we're concerned whether that will lead to strong profit returns. What do you think about Microsoft? What are your thoughts about the 8 stocks? Do you agree with the Wall Street analysts? Please share your favorite stocks. What are your top 3 stocks for 2025? Thank you for watching.